Wait a minute, I think I could probably take this off at this point, right? I mean, I am outside and there's nobody around. It seems pretty safe. Hi, this is Martin Andelman from Andelman Matters, and I'm here in Washington, D.C. in front of the U.S. Capitol. I thought it'd make an ideal spot to continue talking about the economy and the forbearance program that's going on and the millions of people that are no longer able to make mortgage payments. It's going to have an impact, and I think we should talk about it. And that's what we're going to do today on this Call It a Andelman Matters video podcast. Okay, so as far as the economy goes, nothing's looking all that promising, right? Unemployment numbers are just abominable. We're up to something like 44 million people that have applied for unemployment. That's an unthinkable number, and nothing seems to be changing that very much anytime soon. So we've got a situation on our hands, and the CARES Act was the first thing that Congress did to try to alleviate some of the financial pain being caused by the shutdown of the economy. As part of that, they offered a forbearance, a mortgage forbearance. And it was confusing when they first did it. Nobody really knew how the rules were going to work. And a lot of us that were around for the last economic meltdown were very suspicious that people should stop making their mortgage payments all of a sudden and what was going to happen at the end of the forbearance. And there was a lot of disagreement and a lot of confusion. But since then, Fannie Mae and Freddie Mac, who are the two GSEs, government service organizations, that are overseen by the group called the FHFA, the Federal Housing Finance Administration, they did make several announcements since then to say that if you elect to take the forbearance, which requires no proof or paperwork to speak of, then you don't have to make a payment for 6 months. And at the end of 6 months, you could go for another 6 months of not having to make a payment. And then at the end of that, whatever amount you owe would simply be tacked on to the end of the loan at 0% interest. And that sounded pretty good to a lot of people. We've got over 4 million people that have elected to take that forbearance and are no longer making mortgage payments. But it's not all there is to think about when it comes to forbearances. So let's look into some of the details. Okay, so here's the first detail. Your loan has to be owned by Fannie Mae or Freddie Mac. If it's not, none of these rules apply. Okay, so you have to know with certainty that your loan is a Fannie Mae or Freddie Mac loan. Now, you can find that out by looking it up online. There's a site for Fannie Mae, and it's knowyouroptions.com. And then there's a site for Freddie Mac. That has a slightly more complicated web address. I'll put it on the screen at the end, but you can find it by putting in knowyouroptions.com. It'll probably show up right below that. You simply go to both of those websites, you put in your information, and within a few seconds, they'll tell you if the loan is owned by Fannie or Freddie. If it is, then the rules established by the CARES Act will apply, and you can simply call your servicer and say, look, the coronavirus thing has impacted my life, and I can't make a mortgage payment, and they'll say, fine, you don't have to make one for 6 months. At the end of the 6 months, you can do it again. Call them up and say, things still aren't better. They'll grant another 6-month forbearance. Some people have said, no, don't do it. And others are saying, look, that's the best deal ever. Of course you should do it. It's really got a lot involved. I mean, the truth is this. I'm nervous about it. So are a lot of people. Now, there's a couple of questions, right? They say it won't impact your credit score. They won't lower your credit score as a result of requesting this coronavirus forbearance. However, at the end of the year, if you haven't made a mortgage payment all year, your loan still will show that it was in a forbearance, and most lenders are not going to want to do a new mortgage unless you've paid all your payments on time for the last 2 years. So you could find out at the end of the year that although your credit score wasn't affected per se, other lenders don't want to approve you for a new mortgage or maybe increase your credit limit or whatever because you've been in a forbearance all year. So it is something that can come with a price tag. Right? Now, the other thing is, if your loan is not with Fannie or Freddie, then none of these rules apply. Although you still might be able to get a forbearance. But the question becomes, if you don't make the payment for a year, what happens to that money that you didn't pay? When do you owe it back? And here's what we're all trying to get you to avoid. If you were around last time, you remember the phrase loan modification, and you remember that it went kind of along with loan mod hell. I mean, it was just an awful process. It took a tremendous amount of time. It was very frustrating, and it really caused people to lose a lot of faith in government to this day. So you don't want to end up in a situation where you're not making a mortgage payment, and then at the end of the year, you don't know what they're going to let you do, and now you have to apply for a loan modification, and they could turn you down, and you could end up in foreclosure, and the whole thing could be a nightmare. That's why I am telling everybody that I know to do everything else before the forbearance. Call your car company that you're financed your car with, see if they'll give you 6 months off. Call your credit card company, see if they'll give you a break on the payments. But do the mortgage last. If you can make the mortgage payment, make it. If you really can't, then it's time to contact your servicer. But another rule that I think applies is it's always easier to negotiate with your servicer about your situation when you're current than when you're a year behind, when you're already seriously delinquent. So do it now. This is not a time to bury your head in the sand. And if you're struggling now, you have to wonder, if this doesn't end in a year, where will you be then? And what can you do to try to insulate yourself from the worst coming true going forward? The first thing that you can do, and the most obvious thing that you need to do, is save. Okay? This is not a good time to be spending freely, especially if you've already accepted a forbearance and are no longer making a mortgage payment. Whatever money you can save, save it. If you can make half the mortgage payment, but you don't have to, don't look at that and go, gee, I got an extra $700 every month. Let's go buy a bunch of stuff. Save it. You're going to need it. You don't know how long this is going to last. You don't know how bad it's going to get. And you don't know exactly how you're going to look 6 months or a year from now. So savings matter. Okay, that's the first thing. The second thing is, now is a time to start wondering, should I set up a line of credit? Now, it's very difficult to get a home equity line of credit, but perhaps now is the time to refinance the mortgage. Rates are running at about 3%. And there are still FHA loans and Fannie and Freddie loans being done every day. So if your rate is 4% or 4.5%, now is the time to look at refinancing. Don't wait. You're not going to pick the bottom, and rates are not likely to ever be lower than they are today. So that's the second thing, would be, can you lower that payment now by refinancing? You don't want to wait to do that, because home prices are going to fall. The housing market is going to soften. It's not going to happen quickly, and it doesn't happen overnight, but it's happening. It happens because there's less demand for mortgages. People are out of work. 44 million of them are on unemployment. Self-employed people are earning less. The jumbo mortgages that were offered a few months ago have all dried up. The non-QM mortgages, the more non-traditional mortgages, have all dried up. And all of these factors are going to lead to a decline in housing prices. But that will take time, 6 months or a year, before you see the lower values reflected in appraisals, because that's how housing prices go down, right? They don't go down quickly. They go down slowly over time. People put their house on the market for $500,000, and 3 months later they lower it to $475 or $450, and then 3 months later it's down to $425. It takes a while before the lower values are reflected in appraised values and most recent sales. But you know it's happening. So if you wanted to refinance, now would be the time to do it. Now, if you're over 62 and you have, say, 50% equity in the house, now is the time where you want to look at setting up a HECM line of credit. A HECM line of credit is part of the government's HECM program. It stands for Home Equity Conversion Mortgage. And you can set up a HECM line of credit that will be guaranteed to go up every year by about 4 or 5%. So if this year your credit line was $100,000, next year it's $105,000. After that, it's a little over $110,000, right? It just keeps going up every year, irrespective of the home value. Whether the home goes up or not doesn't matter. The HECM line of credit is guaranteed to increase every year by whatever the interest rate is plus half a point. So figure 4 or 5%. Now, set it up now, again, because waiting is going to cost you money. Home values are falling, and that means if you waited a year and your house was worth $100,000 less, you might not be able to get the line of credit at all, and it would certainly be for a lot less money than it would be today. Once you have a HECM line of credit, you don't have to borrow it. You can just leave it on the shelf in case for a rainy day, but it'll always be there, guaranteed, because unlike a home equity line of credit, which, as I've mentioned before, the bank can cancel anytime, a HECM line of credit is guaranteed to be with you for the rest of your life. So you know it'll be there when you need it. So those are just a few of the things that you can start looking at today that maybe you're okay today, but might make a difference in 6 months or a year if our economy fails to come back in any meaningful way. Something else you could consider, it may be obvious, but sell the house. If you've been thinking that maybe next year you'd sell the house, maybe do it this year. I mean, prices aren't going to be higher next year than they are this year. Let's bank on that for the moment. Obviously, nobody can tell you that 100%, but I'd be as close to that as possible. Housing prices aren't going to be up next year. So if you're thinking about selling the house in the next year, maybe accelerate that time frame and get out from under it now at a higher price point than you would a year from now. Wait another year or two and then go buy another house, probably at a much lower price, unfortunately. And the last tip that I'll throw in there involves bankruptcy. Now, if you're a small business owner, you're self-employed, or you're not, and you just don't know whether your job's going to come back, then you might be okay today. Maybe your benefits are still going on and so forth, but where will you be if this is 6 months from now or a year from now before we see any meaningful difference? It could get worse. And if it could get worse, then bankruptcy could become a strategy that you need to take a look at. And if that's even maybe the case, then my 2 cents is look into it now. See a bankruptcy lawyer now before you need to do anything about bankruptcy. Know what your options are and know how you should be preparing for that if that is a possibility in the future. The one thing you don't want to do, and I've said it again and again, is bury your head in the sand. I know there's a lot we don't know, but there's an awful lot we do know, and now is not the time to live in denial. If you think that's a possibility, then now is the time to talk to a bankruptcy lawyer. And if you do need to do that, I've got a list of trusted attorneys and a number of other lawyers around the country that I've known now 10, 12 years that I can certainly refer you to and know that you won't get ripped off. So I'll be publishing that list, and you can pick anybody you want from anywhere, but at least you know I know these people and they'll do a solid job. The point is, bankruptcy is nothing to be ashamed of. It's a tool like any other tool. So don't sit there going, gee, oh, woe is me, I don't want to file bankruptcy. Talk to a lawyer now and find out how that could impact your situation going forward. It's not something you want to wait to the last minute to do, because today there are probably all sorts of options, choices you can make. But if you wait until the house is on fire, those choices go way, way down. There is one final thought I want to throw out there. You know, the HECM line of credit for people that are over 62 is a fantastic program. It may be the safest thing to do right now if you can use a HECM to set up that line of credit. Now, the HECM is home equity conversion mortgage, as I've said, which is part of the government's federally insured reverse mortgage program. And a lot of people have negative views about a reverse mortgage. They hear the phrase and they go, oh my God, there's something wrong with that. Well, there isn't anything wrong with it. But a lot of people have a lot of misperceptions about the program. And usually that's just, well, it's a shame, they should have known this or should have known that. But now, not understanding how the HECM line of credit or HECM program could impact your life going forward really could cause some problems. And it's not the time to ignore this. So I have an idea. How about this? If you think that a reverse mortgage, a HECM line of credit, is something that might help or might be important, then contact me. My email's right here on the screen, mandelman@mac.com. Contact me. I'll just need a couple pieces of information, nothing like your social security number or anything like that, just a couple of pieces of information, and you can get a pretend HECM line of credit, a pretend reverse mortgage, if you will. It won't be real, it'll be pretend, but it'll give you an opportunity to see just how exactly it would look. How much line of credit could you get? How would it work? What would the interest rates be? All the things about it. Then you could read it over, you can take it to your attorney, you can read it to your kids, you can take it on vacation, whatever. And if you decide it's something you want to pursue, then you can just call back to me or anybody else that can help with that and say, look, I want to make this real. I have a pretend one. I'd like to make it real. It looks good to me. And if not, well, at least you'll understand what it would look like if you had one. I think it's a great first step, and I can't imagine why everybody wouldn't want to do it, honestly. I think that it's something you should know about, especially now. Okay, so I'm going to wrap it up here. I don't want to go on too long, and I recognize that I've had a tendency to do that at various times, so we'll wrap it up here. What are the morals of this story today? Well, The first moral is if your mortgage is with Fannie Mae or Freddie Mac, and you're going to look it up online, knowyouroptions.com, you're going to look it up online and make sure. And if it is, it'll follow the rules of the CARES Act passed by Congress here a few months ago. And that means that you can contact your servicer and say, look, I need 6 months off of mortgage payments. I'm being affected by COVID-19. And they'll say, okay, no problem. And at the end of 6 months, you can do it again and have another 6 months of not making mortgage payment. But remember, there can be a cost to that. I mean, when you try to refinance at the end of the year, lenders may say, look, although your credit score is fine, you've been in forbearance for a year and we don't want to make a mortgage to somebody that hasn't made 2 years worth of payments. So that could be a cost. It could be a limiting factor going forward. So you just want to remember that a forbearance is not a forgiveness. It can have a cost. Now, the other thing, what if it isn't Fannie and Freddie? Well, then it's not going to follow the rules of the CARES Act. That means that somebody might give you a forbearance, but at the end of that time, they might say, well, you've had 6 months off. Now you owe us all the money for the last 6 months. And if you don't have it, you might have to apply for the loan modification. And that can be a mess. I mean, the loan mod process was a mess last time, and there were rules last time. Not that everybody followed them, but they were there. This time around, as of right now, there are no rules. If it's not Fannie and Freddie, no one really knows what's going to happen at the end of a forbearance. So be exceedingly careful. Bankruptcy. If you think it might become a strategy that you need to employ, even if it were 6 months or a year from now is the time to see a bankruptcy lawyer, because now you still have options and choices and time to plan. If you wait until the last minute, those things go away. And it's always better to plan than do it at the last minute. Now, the HECM line of credit is the third, right? Selling the house, doing things that rely on a higher home value rather than a lower home value. Home values are most assuredly going to fall. They'll take some time, but they're going to fall. So if you were thinking of selling the house next year, maybe accelerate the time frame. And if you're over 62 and have about 50% equity in the house, now would be the time to set up the HECM line of credit, because your home values are still high. If you wait a year and the house goes down in value by $100,000, you may not be able to get the line of credit, or you'll certainly get less money from it. So this is not a time to just wait. This is a time to plan and look at all your options. All right. Until next time, this is Martin Andelman from Andelman Matters. And this has been we're calling it a Andelman Matters video podcast. If you have questions, email me at mandelman@mac.com. And I'm going to walk around Washington, D.C. and see what things look like. All right. Until next time, thanks for watching.